Also, do you think that the risks are sufficiently priced in of potentially Euro anxiety, the idea that there could be some sort of shift away from the collective region by a major economy, namely France?
It depends which market you look at, to be perfectly honest, because the spot market has barely budged. Yes, euro is a little bit lower, as you mentioned, but that's really euro dollar. If you look at euro yen, still very much near the highs. Euro Swiss has had a decent move, but only really back to levels where we were in February. The vol market's been pretty different. You know, I think tail end of last week, you saw a lot of interest from investors to buy at some euro vol, to put on some downside structures. But even that, you know, Monday, given the news over the weekend and Marine Le Pen saying she'd work with Macron, not looking to push him out, investors are already fading those moves. So to answer your initial question, is it priced in? No, clearly the worst case scenarios are not priced in at the moment.
Potentially, though, we could see a hung parliament. In that case, Elsa, do we just go sideways in terms of euro trading?
It's very possible, and I think, frankly, that's why people are struggling to pile into short euro-dollar positions at the moment. The fact is that we have seen cohabitation before in France. You know, we haven't seen it in this kind of setup, whether it's the far right or the far left that wins. Both have fiscal policies that are pretty extreme in some cases. But the reality is that we've been here before in the euro area, and every time you kind of investors sense there may be some crisis down the corner. We saw it with the elections in Italy when Meloni won. It doesn't ever really pan out, and I think that makes people nervous about putting on positions, having seen it not work so many times before.
Well, Elsa, if that's the case, and it's unlikely to be anything disastrous when it comes to a deficit, let me put this idea to you, that what we're seeing from the market is they are simply trying to test the ECB. They want to see if the ECB comes in and caps spreads like they did when Meloni was elected. Is that what it is? Bond vigilantes pressing Christine Lagarde and co.?
Yes, it's definitely true that you've seen more of a reaction in the fixed income market than you have in the FX market. And part of that is, to your point, you know, markets pushing the ECB to see where's their limit. I mean, the fact is we heard from ECB officials over the weekend, you know, this is a repricing. And to some extent, they're quite comfortable with investors repricing a higher risk premium for France because that is part of the market mechanism. Now, if it looks like it's getting out of control and, you know, it feels like the market is getting dysfunctional, then you may expect the ECB to step in. But otherwise, I think the ECB are going to be quite reluctant to rush to the rescue.
But what if it starts to seep into Italy, to Spain, to other countries where we start to worry about fragmentation, where we worry about their deficit levels? Could the ECB then act?
Absolutely, but that's not really what we're seeing at the moment. I mean, in fact, you know, a lot of the observations people were making on Friday was precisely around the fact that France was trading through certain other countries. You know, when France is trading through Spain or Italy or so on, you know, that in itself tells you something. You know, it tells you that people have reassessed how they're perceiving the risk of French fiscal side. And it's not so much about France exiting the EU. I don't think anybody, you know, that's obviously a terrorist that people have in the back of their minds. But this is far more about the fiscal agenda and what's going to be the policy in terms of fiscal outlook.
Elsa, what I find fascinating about your recent research is you kind of get the sense from you that maybe you think the dollar should be stronger than where it is. That all things being equal, given the uncertainty in Europe and given what we're seeing, which is a pretty resilient economy in the U.S., the AI tailwind, the idea that people are taking weight loss drugs and getting new clothes and spurring a new boom there, whatever case, you should see kind of dollar preeminence. Why do you think we're not seeing an even stronger dollar? What do you think that suggests about where people's minds are at?
I mean, to some extent, you know, you can see that bias in our forecast. But frankly, I've had 106 as a kind of low for this year. I haven't changed it. I still feel quite comfortable with that number, which is not a long way from where we are today. And 108 on the other side, you know, it's really very much a range trade. Part of the reason I think people are reluctant to pile into long dollar positions is because there are some questions out there around the strength of the US economy. It's not our view, but there are some people out there who are saying, you know, we're seeing some cracks begin to emerge. And if the US were to hit recession, I do think euro-dollar would be quite a lot higher. And it's that uncertainty on both sides, you know, political risk on the one side, you know, uncertainty around the strength of the economic data on the other, and the fact that we've already priced in a very good US economic outlook. And so, you know, the risks on the economic side, at least, are to the downside for the US.
When it comes to the dollar, investors are still split on what a Trump presidency would mean to the dollar. Why?
It's a great question. I think in part because Trump himself is so ambiguous on what his policies would be if he were elected. You can expect that he would make a lot of noise around the Fed, push the Fed to be a lot more dovish, but I personally question to what extent he could really force the hand of the Fed. He can't nominate a president or a chair, for a couple of years. And on the flip side, there's a lot of talk around America First, around tariffs, around how much more aggressive tariffs could be in a second Trump presidency. And that leads people to think the dollar would strengthen, other currencies would weaken. So you can see how on both sides there is, a push and a pull. Where I do think markets are perhaps overly worried and maybe need to tone it back a bit is the long-term deficit outlook. Yes, it's something we need to watch, but from the dollar perspective, as long as the US private sector is running a surplus, that's much less of a currency story than some people make it out to be.